Hello everybody, welcome back.
Hello.
We're thankful for everyone who has participated in our previous 2 episodes of property investment, talking about selecting the right project, determining if location is the most important. Today we're going to cover a very important aspect of property which concerns majority of the homeowners, which is how do we calculate our cash proceeds from the sale of our place.
As 𝐤𝐤 was mentioning, today we're sharing about how to count cash proceeds for your flat. A simple step-by-step approach to this is to have these following key information on your hand. So you look for your current outstanding loan, either from HDB or financial institutions, which is our banks. You take into consideration if there's any outstanding levies to be paid, for instance, HDB maintenance, lift upgrading, CPF accrued interest and amount used from both names that are inside the property. Last but not least, you also would have conveyancing fees, which translate to legal fees as well if you sell your property. So that you will actually need to take into consideration when you're counting your cash proceeds as well. For those of you who actually have a HDB flat, where you can find your financial information will be actually to log on to HDB website. You go under a financial info tab. You would then actually be able to pull out your outstanding mortgage loan amount from here. Simple snapshot of what you will be looking at when it comes to pulling out your CPF OA used as well as accrued interest. You can log on to cpf.gov.sg to search for your OA as well as accrued interest used. A simple illustration when counting your cash proceeds from a property is if your property value is at 500K, you would then use the 500K to minus off your outstanding loan amount, minus off your wife or spouse's CPF OA plus accrued interest amount, as well as minus off your husband's CPF OA plus accrued interest amount used. This is how you then end up with the cash proceeds.
An example, if the value of the flat currently right now it's 450,000, right? And your outstanding loan is 200,000, and the CPF used plus accrued interest becomes 150,000. What happens in this scenario is, will you still receive cash? 450,000 minus your outstanding loan of 200,000 minus your 150,000 CPF used plus accrued interest minus another 100,000 CPF used plus accrued interest, you'll be left with $0 cash proceed. And in certain instances, we even have a negative sale, meaning to say when your CPF used plus accrued interest plus your outstanding loan is higher than the value of your place, you end up in a negative sale situation. We strongly recommend all our homeowners to once in a while review their property to ensure that they do not end up in a negative sale situation. And also at the same time, you can take this opportunity to monitor the value of your place to ensure that at least our homes are maintaining its value. Thank you.
Thank you for joining us today. See you again on the next episode.
Bye.
Bye.